All right, guys, I can't stay quiet about PayPal stock any longer. I know it's been a while since we discussed the stock on this channel, so we are absolutely going to talk about it today, and I'll tell you exactly why it's been so long since I've talked about PayPal stock too. So there's a lot to get into today here in regards to PayPal, so make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. And more importantly, we're going to have a very frank discussion about YouTube and about PayPal as well. Now, I'll discuss PayPal's earnings here in just a second, but I get comments occasionally. Hey, Luke, why aren't you making a PayPal video? What's going on with PayPal? Do you not believe in PayPal anymore? All other things of that nature. Let me be open and transparent for you as a creator. As a creator here on YouTube, I rarely get to talk about the intimate things that I want to talk about because they perform terribly on the algorithm. More importantly, based upon what you guys click on, that tells me the content that you want in that particular moment. So there are times when, hey, you guys wanted PayPal content. It was getting crazy views. It was, obviously the click rate was good. It was triggering the algorithm. All those sorts of things were happening. And then all of a sudden it fell off. And then you're like, oh, okay, it could very well just be timing, something else of that nature. But you do a few PayPal videos, for example, and people aren't clicking on them at all. Obviously the people that were clicking on them were liking the video and everything else like that. So it wasn't the fact that I was necessarily missing the mark. It was just simply you guys as an audience as a whole had kind of moved on to other stocks at the time that you wanted to hear more about. So in the end, I have to give you guys what you want. And what you guys are clicking on is how I know what you want along with what you're liking, right? That's how I know, hey, they like this content, or hey, they don't like that content, or hey, maybe I need to change this up a little bit. Maybe I need to change that up a little bit. That's how I know. So I would love to talk about Apple stock all day long, even though I think my take would be controversial. But the reality is every time I put out an Apple video, nobody clicks on it. So in the end, I've got to put out the videos that you guys are clicking on that you want to watch at that particular moment in time. And of course that changes. There's times when you guys didn't want to hear anything about Palantir. And then obviously there's other times where you guys can't get enough Palantir content. Same thing with SoFi, same thing with Tesla, same thing with a lot of different stocks. And obviously I try occasional things. I'll try a new stock here. I'll talk about Google. I'll talk about some exciting things happening with other stocks. But I also know that whenever I do that, if it doesn't really excite you guys as an audience, well, all right, let me change a few things up. Let me try again and see maybe if I just hit the wrong mark. But if it doesn't happen that second time, unfortunately, I've got to move on and try something else and make sure that I'm giving you guys the content that you guys want in the end. I'm not one of those creators that puts out 2-3 videos a day. So therefore you can kind of hit all the different subject matters and try to hit everything. There's only a handful of videos I put out a week. So there's only so much time in the day in order for me to put out YouTube videos. So I got to make sure that I'm hitting the topics that you guys want in the end. All right. So hopefully that all made sense. Sorry for the long rant there, but I felt like I wanted you guys to understand how YouTube works a little bit, because I know it's, sometimes it's a mystery as to why we do things and everything's, I'm definitely not doing it for the views. And I can assure you those views aren't paying me a whole ton of money extra or anything else like that. People say, I understand some of the big YouTubers make, tens of thousands, if not hundreds of thousands of dollars a month. Well, that's not this channel right here. So the views don't matter to me nearly as much as giving you guys what you want in the end. So here's the video I released to my group. It has the complete breakdown of PayPal's earnings, why I decided to buy the stock, kind of where I see the stock going over the next year, some of the realities with PayPal stock that everybody seems to be forgetting. And that is very, very key to owning a stock, and expectations on stocks and a lot of other things of that nature that have gotten way out of whack over the past 6 months or so. So this is kind of all encompassed in one video here. So let's jump into that video. All right, guys, so let's talk about PayPal's earnings call. I tried to get this out there as quick as I could for you guys. Obviously, typically I take my time with earnings calls. I don't typically jump right into them right away or anything else like that. But anytime we get a big move up or down, kind of like we did, if it just would have been a normal 3% move up or 4% move down, whatever the case was, I wouldn't have thought anything about it. I would have, listened to it later, late tonight, maybe early morning, something of that nature. But it's just not how it fell off this time around, right? It moved massively down. Obviously checked the numbers, didn't see anything there. So it's just kind of those kind of accelerated my timeline a little bit. So let's talk about those earnings specifically, because basically, it was kind of recapped there in the earnings a few times. 2024 was that transition year. I know we talked about that over the course of the past year. That 2024 was that transition from, the old style to the new way, getting some of the new pieces implemented, getting rid of some of the old contracts and everything else. So we knew the earnings were all going to kind of be not bumpy, but definitely choppier than they should be moving forward. And that's exactly what happened, right? But the good news was we were still up from the prior year overall. We had solid numbers. We got good guidance. We actually had really good free cash flow numbers, which kind of tells me that overall, the business was really healthy. The numbers didn't look better because they were getting rid of a lot of bad stuff, taking some one-time charges. A lot of other things were being done to kind of clear the path for a much better and a much smoother 2025. So that's all good news there. And the other great thing that I really read, or that obviously they reemphasized it in the call again, is the share buybacks. They are great, especially as the share price stays down. That is so critical. Palantir also has share buybacks on right now, but it's not really prudent to do it at its current price, right? I mean, obviously taking money off the table is taking money off the table regardless, but it becomes much more prudent for Palantir to put that money into other things, into growing out the sales team, into growing out some of the other pieces of the business. And obviously we discussed in that review how that should be done and the appropriate way to do that and all that good stuff like that. So I don't want to rehash that here. But for them, it's more prudent to put it into that, as opposed to for PayPal, it's more prudent for them to take that free cash flow and use it for share buybacks. They are now authorized almost $18 billion worth, or actually it's a little bit over $18 billion worth of share buybacks. And when you're sitting at a $78 billion market cap, that means they can buy almost a quarter of the shares back with all the buybacks. If the stock price kind of stays here, they could buy back a quarter of those shares. Now, obviously you couldn't do that all in one chunk. The price would just, it would just cause insanity. It just wouldn't happen. But the point being, theoretically, they could very well buy back a quarter of the company right now. And if they do it strategically, and if the stock stays down over a year, that might very well be the case. I think it's highly unlikely that they expend all of those share buybacks, but nonetheless, they are authorized, and if the stock stays down, that's something that is huge long-term. In this short term, it won't necessarily help us out a whole heck of a lot there. Over the long run, though, it's kind of like another valuation reset because it really boosts that EPS number as you start to take shares off the market. So obviously you want those shares to be cheaper so they can buy more of them back, basically getting more bang for your buck, which of course means better EPS numbers in the future, easier EPS numbers to hit in the present. That's basically what it means there. Now let's talk specifically about the guidance here a little bit, and this is kind of where my head went as I was listening to it. Will the innovations, all the things that they're doing, all things that they put in place during this transition year, will they actually accelerate this year and beat the guidance? The guidance was very good. Do not get me wrong. I'm not saying it was bad at all or it wasn't optimistic. Obviously, it was better than last year's guidance, but I really want to see them beat guidance by a pretty substantial clip if these innovations are truly game-changing and truly going to, really, really turn into something big for PayPal. Obviously, I don't expect that first quarter, kind of like the Salesforce over there with Palantir. Everybody was expecting it, hey, they announce it, and then all of a sudden a quarter or two later, they expect these incredible things from the sales team. And then of course, when they didn't deliver, because it takes, at least a year and a half to ramp up that sort of thing, people were freaking out, selling out and all that sort of stuff like that. It was silly. Even the bulls were saying that sort of stuff. It was silly at that stage. So obviously if they meet guidance, that's good, but I really would like to see them really beat guidance as the year goes on by a pretty substantial amount. So that way we can see, hey, these innovations are going to do a lot better than what was expected. I know Wall Street kind of sold off based upon a lot of stuff about, they didn't like a few of the numbers, and they kind of explained them pretty well. I'm not worried long-term about that. Obviously short-term, it was just what happened this quarter. It wasn't that big of a deal, especially given how the overall numbers looked, the year-over-year numbers looked, and more importantly, the guidance given, which just Wall Street sometimes does this. So you got to remember, I kind of wait for things to shake out in regards to earnings. I don't get all wrapped up into what happened. So Wall Street must love it. Wall Street must hate it. Obviously sometimes it lines up whenever it's like a Palantir, right? Oh, Wall Street loved it. It's through the roof. Obviously it went up massively and all that sort of stuff. I don't really make a lot of reactions in regards to these type things because I like to wait and see as it all gets digested, based upon, that's the reason why let me rephrase that. As I do my analysis, I give myself the grade for the earnings, what I think should have happened, how I think it should move after earnings. Not that it has any bearing on what will actually happen, because I understand that it's completely controlled by traders and options and all kinds of other ridiculous games that doesn't really have that just trigger based upon what the numbers are. There's not an actual, hey, we think if they really beat, we really love the company and stuff like that. Obviously, a lot of folks have loaded a lot of stuff up to the upside in regards to Palantir. I'm not sure what PayPal could have done to not have a downside type scenario. So I try not to just use that as a beacon per se, or as a indication of was it good or bad earnings. The price action afterwards is irrelevant to me. But more importantly, I want to talk about expectations for PayPal and kind of making sure everybody that owns PayPal understands what your expectations should be for a stock like PayPal. Now, let me be very, very clear. This is not an early stage company like SoFi or Square. They don't have the same growth potential. They are much larger, have a lot more kind of girth per se, a lot more corporate structure, and it's not early in the growth curve like those other two companies are. And it's not it's what? I don't know, 4 or 5 times the size of SoFi right now. And we could argue right now SoFi is overvalued, and clearly PayPal is undervalued. So to me, those are two different types of stocks that are going to move wildly different. So to me, it's pointless to expect the same kind of growth in PayPal that I'm going to get out of SoFi. Now, is it cheap? Absolutely, it is cheap by any metric you want to use. But I don't expect it to double up like SoFi did last year for us there at the end of the year. It's not the same stock in terms of growth, the way it moves, the way everything that can go around on with a stock like SoFi can't happen with a stock like PayPal at its point in its journey. Now, the good news is I don't need everything in my portfolio to be a potential 10x. I don't own every single stock for that. That's not prudent investing in my opinion, of course, and definitely not at the stage that I'm at and where I'm at in my wealth building journey. I'm to the tail end of all that sort of stuff, not at the beginning like a lot of other folks are. Think about this too. It was up 40% last year. So if we just get 20% this year, which is an incredible return for a stock, you got to keep that in mind. We outperformed the market last year, outperformed what an incredible gain is last year in regards to PayPal. So if we just go back to that 20%, which is still an incredible return historically, if you can get that every single year, you have an incredible stock on your hands. But if we get that, you're over $100. And then of course we get a 20% the next year. Obviously you're up over 120 and so on and so forth like that. And those would all be incredible gains in the stock, but expecting it to just, go from, I don't remember what was trading there at the beginning of the year. We'll just say $90 to make the math easy, expecting it to be at 180, midway through this year. And then the following year, being at 260 or whatever the case is. It's wrong type stock for that, wrong type of mentality, more importantly, in regards to your investing. Of course, I'm sure the question is coming to you guys, and probably you guys are asking yourself the same exact thing. Why exactly did I decide to buy this right now? I mean, I haven't really deployed capital this year. And to be honest with you guys, it was just simply because I like the earnings. I like the earnings call. I thought it was an overreaction by Wall Street, and so I bought another batch of shares. That was it. A lot of other things, we got an overreaction, but it was way to the upside, right? In regards to Palantir. It's a good thing. It's not a bad thing. Heck, this is the best discount we've gotten this year on stocks that I want to buy this year. Now, also make sure you go back and you view my video at the beginning of the year if you're looking at what my strategy was for this year, because it's very, very much different than it has been in prior years because of so many different things going on. But always remember, this is strictly based upon my plan, what I need to do for me. This is based upon my situation, my asset base, what I'm going to spend money on this year in regards to kind of expanding other investment opportunities that I have, other asset classes that I'm investing in. And so your plan, your situation, your everything else is going to be different than mine. So don't follow me. Don't use this as, hey, Luke signaling this, Luke signaling that. I've told you guys, if you've been in this group for any length of time, I know you long timers, you guys know it. I'm here to show you how to invest, and simply am using myself as an example of how to execute to a plan. That's it. Investing is so individual, thinking you can follow this person, follow that person, follow this strategy, follow that strategy, and it's just right for everyone. It's 100% fool's gold. Somebody is selling you something. It is simply not true. Every single stock, I can make every stock you give me, doesn't matter. Palantir, I can make a wonderful case right now. That is a great stock for somebody to own. And the same exact stock, same everything, same dollar amount, same everything is a terrible stock to own for somebody else. I can make an equally good case just for that based upon your plan, your goals, your risk tolerance, a lot of other things of that nature. There is no one size fits all, one stock that everybody needs to own or any of that other garbage that's out there. So please kind of get that out of your head and please follow your own plan. I'm not trying to criticize. I'm not trying to do anything else like that. Please don't take it that way. I'm just simply trying to show that my plan and my strategy probably won't make a lot of sense if you apply it to your plan, your goals, and all that other sort of stuff like that. Because, I mean, unless you have the same asset base, the same group of companies that you own, not stocks, but the same group of companies that you own personally, the same real estate portfolio, the same future plans for your life for the next 2 years, 3 years, 5 years than I do, all those sort of things like that have all factored into what comes down to, in the end, part of it, why I bought PayPal today. So just kind of keep that sort of stuff in mind. That's kind of my view on the earnings. I am not concerned with PayPal at all. I don't care about what Wall Street does. I 100% agree with you guys that it's frustrating. It's very frustrating to be a PayPal shareholder because it just doesn't seem to catch that momentum that everybody else has caught so far, but it will return at some point in time, or we'll just get a nice steady march up. Like I said, we quietly got a 40% return last year in PayPal. Pretty amazing stuff, right? I mean, that's a pretty good return. You know, if we quietly get another 20% this year, another 20% next year, before we know it, it's going to be in a great, great spot. Yes, other stocks are going to move faster. Yes, other stocks are going to get there faster than that one, quicker, whatever you want to call it there. That's fine. But that doesn't necessarily mean that I need to sell this one and get into that one and try to figure out which one's going to do the next and all that sort of stuff. That's trader games. I'm not into that sort of stuff. Right now, it is trading cheap. I bought more shares because it fit my plan, and I'm going to move forward with that. But I also understand it may not be right for everyone too. And that right there is where you need to make that assessment, but always lean on that plan, on your goals and everything else, and make sure all those stocks all align with your goals more importantly. So, and remember, if you want to be part of that community, see all videos like that. I release 2 or 3 of them a week. You want to be a part of the best 6, 7, and 8 figure Discord out there. Get your free coaching. It'll take 5 courses for free. Check out the pinned comment down there. I may have left something special for those of you guys that stuck around on the video this long. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.